So let's have a look at those market numbers now, and it's pretty ugly everywhere. The ASX was already well down before those Chinese PMI figures came in, with all sectors under pressure. At one point it was down 2%, though the market did come back a little towards the close. Across the wider Asian region, you can see there the extent of the falls. Hong Kong alone has lost more than 8% this week. Things would have been worse in Shanghai were it not for the intervention of the national team. And the Australian dollar's down against all the major currencies. Michael McCarthy from CMC Markets joins me now. And Michael, look, another rough day. Where was the fallout here?
Well, that enormous fallout coming because of those fears about the pressure that a rising US dollar will put on emerging economies. And it's not just about investment flows. That stronger dollar, while it might stimulate demand in the US, is seen as really damaging for this region. And of course, Australia's high engagement with the higher growth area of the Asia-Pacific region means that we're particularly vulnerable. And the pressure we saw today was almost universal in the share market. Every major sector finishing in the red today. We did see a lot of changes in the sectoral leadership. It wasn't clear why all the selling was hitting particular sectors. It was just a sell first, ask questions later response to the numbers today.
Sentiments really turned on China and the ability of the authorities to manage the situation. It's quite serious now.
Yes, it's getting that way. One of the misnomers here has been the performance of the share market as an indicator of strength or lack thereof in the Chinese economy. It's quite clear that the share market in China responds to policy changes, not necessarily underlying economics. But at the moment, when everybody's looking for signs of further weakness, those falls in the Shanghai Composite are really having an impact. And of course, with third quarter growth not due to be reported now for another month and a half, there's very little for markets and China bulls to hang their hats on.
Yeah, look, in the past we've seen a crash in the developed world spreading to emerging markets, but this is the other way round. I mean, is that particularly sinister, or...?
Well, it's a little curious, Tiki. It's a little hard to explain, particularly given the full disconnect between the market in China and the rest of the world. You simply can't invest there if you're not living in mainland China. So to think that this should have knock-on effects is a little harder to explain. But because there is a real background to this, a slowing global growth scenario and a rising US dollar, it doesn't really matter why they're selling. They just are.
All right, just one or two domestic stocks. Medibank Private, one of the very few bright spots today, widely held, of course, amongst retail investors. Take us through it.
Yes, well, modest expectations were the key to the performance today. And any time you see a stock rise 13% on a day when the broad market is falling sharply, it's a good performance. But one of the keys here was that the market wasn't expecting a lot. Having surged higher after the placement, the shares have drifted off and actually traded below the placement price. So when this good report came out and also painted a positive picture for the future of growth of around 6.5% in profit for 2016, the market responded sharply. Good volumes trading today and a lot more enthusiasm and optimism around Medibank Private.
Now, Michael, Woolworths, a very bad time for the company to lose the boss of Big W. What on earth happened?
Well, after Grant O'Brien, the CEO, announced his resignation in June, it was always likely that we would see further changes in the management suites at Woolworths, and that's what we got today. Big W is the perennial underperformer. It does appear there are also some personal issues surrounding the departure of the head of Big W, but whatever the reasons, it's clear that there is a broom going through the executive suites at Woolworths, and while the market reacted negatively today and the shares came under pressure again, it's likely this could lead to a turnaround in thinking if the right replacement is found.
Michael McCarthy, thank you very much for all that.
Thank you.